The evidence continues to pile up that the Canadian economy is imploding. We're going to go through some of that data today. The abysmal GDP data that came out, the unemployment data that showed Trudeau's immigration policies are really creating a depression in Canada. And we're also going to go on to what is happening in China and what is happening in the United States, which is coming in October, that could impact the global economy, and that would include Canada. So let's get right into it. Starting off with the GDP numbers. So real gross domestic product was nearly unchanged in the second quarter, following a 0.6% rise in the first quarter. So I just want to touch on that rise in the first quarter, because that does not mean the economy is doing well. So in the first quarter, the main thing that attributed to the rise was this January number that we got in GDP. And I did say in December last year, I said, guess what, guys? When the January numbers come out, especially for GDP, they are the most manipulated. The same with jobs numbers in January, because of the spending drop off and all the temporary employment that goes on leading into the holiday season. There's a massive adjustment the government does. And unless you believe that they're going to make that adjustment and they're going to make it and do it in a way that actually shows the truth, or they're going to do it in a way that actually gives them some sort of advantage of making the economy look better than it actually is, you can draw your own conclusions on that. But I know where I stand on it. So anyways, let's get back into the GDP numbers. So Q2 wasn't as great as even you would think. So the slowdown was attributed to declines in housing investment, smaller inventory accumulation, as well as slower international exports and household spending. None of that sounds like good stuff. And if you go over to the housing dependence, you're just not going to believe it. You know, Canada out of the G7 is the country with the most housing dependence, where the housing market matters most for the economy, sort of like China. And essentially China is having massive problems in the housing market right now, massive problems in their economy too. And you know, Canada will likely suffer the same fate, because they have this massive housing bubble as well. And it's just such a large percentage of the economy. And this is something that people don't realize. I mean, it's double that of the United States. If you look at the United States, they're around 20%. Canada is over 40% here. So just kind of crazy. So I just wanted to show you that household spending is down. That's not a good thing. So household spending slows. Growth in real household spending slowed to 0.1% in the second quarter from 1.2% in the first quarter. So that isn't telling you good things either, is it? If people are slowing down compared to the first quarter, what is going on there? Obviously, people are cutting back. And we're talking about real household spending here. So this is inflation adjusted for the government's CPI. And we know the CPI is not accurate at all. So we know the fact is spending is declining way more than even these numbers suggest. And it's just a point I want to mention, because things are a lot worse than this report actually shows us. So it says the slight increase in spending on goods, 0.1% in the second quarter, was led higher by spending on new trucks, vans, and sport utility vehicles. I mean, that's a great thing, right? Before a recession, right? Reflecting improvements in previous supply chain challenges. Growth was moderated, however, by declines in new passenger cars, minus 9.5%. Wow. Furniture and furnishings, minus 3.3%. Major durables for outdoor recreation, minus 8.3%. And natural gas, minus 6.3%. It goes on to say, in the second quarter, sharp declines in spending by Canadians abroad, minus 6.3%. Expenditures on alcohol beverage services, minus 5.9%. Offset the rise in spending on shelter services, plus 0.5%. And air transportation services, plus 6.8%. And telecommunication services, plus 1.9%. So just think about that. That sounds to me like the standard of living of people is declining. They're spending less on vacations, but they're spending more on getting there. I mean, how does that sound like a healthy economy? Does that sound like a healthy economy to you? While aggregate household expenditures edged up in the second quarter, spending per capita fell 0.7%. In fact, per capita household spending declined in 3 of the last 4 quarters. So what does that mean for businesses? Not a good thing at all. And another thing that I want to mention here, the GDP deflator rose 0.7% in the second quarter as consumer inflation remained elevated. So let me me explain that real quick. So basically, the GDP deflator is what they're taking off the actual unadjusted for inflation GDP numbers to make it a inflation adjusted GDP number. So essentially, they take this number off and it's supposedly the calculation for the CPI. So we know that's completely incorrect. They should be taking a lot more off, and that would mean that we would be in a recession right now. So you can believe either one of two things here. You can believe the government's numbers, which mean absolutely fuck all, because it's what goes on in the real economy that matters. It's not what the government tells you. Or you can believe what's actually happening in the real economy, which is we're already in recession and we've been in one since November last year, and things are only getting worse. The Bank of Canada is holding rates high, businesses are being crushed, jobs are going to be crushed last, and when that comes, that will be fast, as it always is in these cases of recessions. So corporate incomes face continued headwinds. In the second quarter, non-financial corporate incomes declined for the fourth consecutive quarter, continuing a trend that began in the third quarter of 2022 after reaching historical highs in 2022. So corporate incomes in Canada are going down. So again, spending down, corporate incomes are down. What does that mean for the labor market eventually? Not good things. You and I understand that, but the government just doesn't understand that, and neither does the Bank of Canada. So looking through the windshield right now and not looking in the rearview mirror, we can see that things in the economy are just getting consistently worse as time goes on. So it's incredibly important to remember that. I wanted to show you this quickly before we move on. The GDP deflator, this kind of shows you, it's the United States, it's ShadowStats, but it shows you how the US has not even recovered from the pandemic recession, even though the red line, the official numbers, tell you that it has. This is adjusting it for a GDP deflator, which is more realistic, like the 1980 CPI. And you can see growth has not nearly been as good as the red line would lead you to believe, which is the government essentially. And then we've also got what's going on in housing investment. Better Dwelling put out this article, quite interesting. It shows essentially what's been going on with housing investment. You can see since 2020 the distortions that we've had in the economy. So you've only got to think, if 40% of the economy is dependent on spending on housing and things of such like renovations and everything else that goes along with buying stuff for your house and everything like that, then guess what? Look how distorted things must have got. You saw basically the spending went massively up during 2020 and then fell during 2021, although it was kind of all over the place. And now it has gone down drastically. So if you think about the recovery, all the places which we've seen a big recovery in, such as real estate, were massively distorted by what the government did. The government essentially allowed people to defer payments on everything, so their income skyrocketed, and instead of paying back that debt, they just spent. So yes, there was some people that were saving, but that is skewed highly by the people who are earning massive amounts of income in the economy, who are generally saving, 10-15% of their income. That skews the figures massively. But for most people, they're living paycheck to paycheck, as we're going to discuss tomorrow or the day after when we go through a recent poll. You've seen obviously what's happening with month over month GDP. You can see it's particularly weak if you strip out this January month. And then basically you've got the quarter over quarter growth, and that is 0% for Q4 2022. You've got 0.6% for Q3. You've got 0.6% for Q1 2023. And then you've got 0% for Q2 2023. So that does not tell us good things about what is happening with the economy. This is the Ivey PMI that came out slightly better than anticipated, and it's at 53.5 right now, up from 48.6, which was another low point. So the Ivey PMI slightly better. And now we're going to get onto the labor report, which just shows that Canada is in a dire situation. So employment rose by 40,000, which sounds fantastic. This increase in employment was outpaced by population growth, 103,000. Just think about that for a second. So Canada is importing all these people, promising them that they're going to be able to find a job, that their life is going to be better. They're getting here, realizing the cost of living is absolutely insane, completely out of control compared to what people earn. And not only that, they can't even find a job. And we're seeing that across Canada. You're seeing international students that are living living in tents on the street. You're seeing migrants that are coming here again, living in tents on the streets. You're seeing more of a homelessness problem than ever before in every major city across this country. So things are just absolutely terrible. And this really shows it in this report. So despite the increase of 40,000, the unemployment rate held steady at 5.5%. And basically we saw some reversal of what we've seen over the past couple of months in terms of the construction jobs. We saw educational services jobs, they went up a lot. They've kind of backed off a little bit. Construction jobs, they went down a lot over the past couple of months. They've gone up slightly now. You've got technical services jobs that have added 52,000. You've also got Alberta added 18,000 jobs. British Columbia added 12,000 jobs. Prince Edward Island added 1,800 jobs. So basically, a lot of the places where we saw unemployment rising has sort of backed off a little bit, which you would expect because obviously things don't go down in a straight line. So it's incredibly interesting. We'll see what continues to happen with these labor reports as they come out. So the unemployment rate just maintained essentially at 5.5%. But you know what's happening with Trudeau's immigration policies is just unbelievable when you really think about it. The unemployment change still looks like a pretty strong labor market. If you're just looking at these figures right here, you can see we've had some declines. Maybe it was the start, maybe it wasn't. We're only going to see as time goes on here, but it still looks pretty strong. We're still getting more reports coming out that are saying things are actually strong in terms of at least the labor market. You have to remember the labor market is always the last shoe to drop. So everybody points to in the mainstream media, the labor market, so does the government. And they go, hey, oh, it's all strong. Everything's going great there. But that's always the last thing to drop. So, you know, they're not looking at anything else. They're ignoring the GDP numbers. It's kind of crazy, actually, when you really think about it. They're ignoring their own metrics and they change their metrics all the time. And despite the increase in employment, look at what is happening to productivity. So you are importing all these people and it is leading to a less productive economy. We had recently the productivity come out 2 weeks ago for July and it came out at 105. Again, look at how this has gone down. They were attributing this to wildfires, but how is that wildfires? Just look at that. It's gone straight down productivity. I mean, I just find it baffling how they create these narratives, essentially, which to a lot of people would sound logical, because think about it, there were wildfires going on and it sort of makes sense, doesn't it? But that is not the case at all when you look at the overall trend, which they never tell you, of course. And then essentially, despite those weak GDP numbers, the Bank of Canada continues to say interest rates may not be high enough. They were speaking at the Calgary Chamber of Commerce last week. Inflation has remained above the bank's 2% target for 27 months. Just think about that for a second. So what a great job they're doing. I'm sure they'll get some big bonuses for that. In a speech to the Chamber of Commerce in Calgary, Alberta, McClem said one of the possible reasons for inflation staying above target was that it might be taking longer for rates to work. But the other possibility is that monetary policy is not yet restrictive enough to restore price stability. The other thing is you've got a lot of provinces that are still doing stimulus checks. I know Alberta is still handing out stimulus checks, and all of this stuff is just inflation. The government doesn't produce anything. So even though your taxes are staying the same, the government is just taxing you more and more through inflation. And that is evident in places like Alberta because they have one of the highest inflation rates in Canada, especially if it was more realistic. I mean, you've had rents go up like 50% over the past couple of years. The data can't even keep up with it. You've got the cost of goods and services that has gone up well over 30%. And I'm speaking about Alberta because that's where I live right now. So I know what's going on there because I've seen it happening. But it just kind of shows you how insane things really are, because when the government is handing out stimulus, regardless of what you think of the premier and you love her or whatever, you have to think logically about what's happening. The government does not produce anything. They just take from the private sector. They take from you and from me, and they don't produce anything. And essentially, they hand out that money. Guess what that's going to do? It's going to cause inflation. So it's just kind of crazy. And you basically had this happen, which I thought was hilarious. You had David B and Doug Ford basically asking the Bank of Canada to halt rate hikes. A lot of people were kind of unsure what was going on there, but I'll just tell you my take on it. You might have a different view. But essentially what I think happened there is they knew that the Bank of Canada was likely to hold rates. So they put out this public plea for them to hold rates essentially. And guess what? The probability was that they were going to hold rates anyway. So that kind of makes them look good. If you're just sat in the public, you don't think critically, like most people don't, in fact. Now let's get into what's going on in China and the United States. So China's exports, more data came out from China. You know, the exports, they went up slightly, but still down 8.8% in August. So the exports are just abysmal. Look at what has happened over the past year, and look at what has happened since China reopened. You know, it went up for a little bit and then it's just crashed right back down. And it's not just happening with their exports. Look at their imports as well. So, you know, you had even smaller amounts of imports increasing during that China reopening earlier this year, and it has just cratered. The amount of imports has absolutely crashed. And what does that mean for global oil prices and energy demand? Because China imports a lot of energy. And could this be why the oil market isn't going to $100, $110 a barrel? It's because this demand in China continues to weaken. Now, I'm long-term bullish on commodities, but the thing is, I think there's short-term headwinds that are going to come into play over the next couple of years, which are recession, for instance. So we'll continue to monitor it. And I'm not bullish on what's going on in Canada by any stretch of the imagination. You know, Canada has destroyed the energy sector, and it's going to take a long time to rebuild from that, even if you get a new prime minister. And then I want to show you this. China's existing home prices back in free fall as sellers rush in. And I just want to show you this chart because it's really interesting. You saw exactly the same trend as in the United States and in Canada happen in China in terms of real estate prices. Look, Chinese real estate prices went up in the spring and now they're heading back down. Doesn't that sound familiar? Because the same thing happened in the United States. The same thing happened in Canada. You know, there's all these fucking narratives that say, oh, it's this is the reason why real estate prices went up this month. This is the reason why real estate prices went down this month. And it's all complete bullshit. It's all based on psychology. That is how you can see this, by looking across different countries where clearly there are completely different variables. I mean, China is a communist country, for instance. So things are entirely different there. I think you can agree with me on that. And then this is happening in October. So student loan repayments will resume in the United States. They start on October 1st. What is this going to mean? You're probably thinking, what does this mean for Canada? Well, it actually means more than you might think, because guess what? If there is weakening demand for Canadian exports, that's going to affect provinces that rely on those exports heavily, like Alberta, for instance, because Alberta is more reliant than a lot of provinces in Canada on exports and the US. So typically when the US heads into recession, so does Alberta. And it's kind of an interesting dynamic that you can look up maybe after this. Maybe I'll do a video on it. But anyway, the student loan repayments are going to have an impact. Once those people start paying back their loans, guess what? They're going to have less money to spend on other things, which is going to consequently mean less demand in the economy, more likely a chance of recession. We got the yield curve, so many different things. So the data is telling us that the economies are imploding around the world, China, the United States, Canada. So things are not good at all. So anyway, if you've enjoyed this video, you might like this video here. You might like this playlist here. Thank you so much for watching. If you're looking for a VPN, go to expressvpn.com/marketmania. That's my VPN provider. Thank you so much for watching. See you in the next one. Take care.